Hi everyone, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, May 17th, 2019, and we are now in the final hour of the trading day and the final hour of the trading week. So as many of you know, I place most of my trades during the last hour of the market because I feel like the closing price is the most valid price of the day and therefore the best price to make my decisions on as far as my entries are concerned. So the format for today, as always, is first we're going to run the 40-second legal disclaimer. Then we are going to take a look at my current positions, when I got in them, why I got in them, and how I'm going to manage these positions going forward. And then we are going to take a look through my stock watch list. Each stock one by one, we're going to analyze the support and resistance levels, moving averages, and see if there's anything interesting that I may want to enter a trade with at the end of the day. So, and then after the market closes, if you have any questions about anything I've mentioned during the live stream, or if you would like me to take a look at any stocks that you may have an interest in, I'm happy to do that and give you my opinion about that. So that is the plan for today. So hang with me. We're going to play the legal disclaimer and I will be back in 40 seconds.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, good. We got that out of the way. So let's see. So first of all, quickly just go over the markets. It's been kind of a mellow day, I guess, in a way. We were down earlier in the morning. Then we had some news that brought us back up. It's been pretty light volume, extremely light volume, actually. And we're heading into into the weekend. I think people tend to get a little nervous these days based upon what happens every weekend. So be interesting to see how the market reacts going into the end of the day. But currently, all the indexes are down. The Dow's down 11, the Nasdaq's down 41, and the S&P is down 6.13. So not a huge day one way or the other. So let's take a look. All right, so first of all, let's go through, take a look at my current positions and see what's going on with them. All right, so this is DDM. This is the double leveraged Dow Jones Industrial ETF. I purchased this here on the 15th of May when we had we had a close below and then a close back above the 200-day moving average. This is a good back-tested approach. If you were trading this mechanically, you would just buy this when it closed back above the 200 and you would just hold it until it closed under the 200. I don't really trade that way. I take the entries from the mechanical system as my entries into the trade, but then I manage them discretionarily going forward. Here we bought this at 45.28. This blue line up here represents the 50 RSI. So a lot of times when you buy below the 50 RSI and it goes up to the 50 RSI, a lot of times it will test it, reject it, and that will be my place to just go ahead and lock in profits. We hit 2 or 3 profit targets, I can't remember now, on DDM yesterday, which took me out of about, let's just call it 25% of the trade, which is nice because whenever the market goes my way, I do want to take a little bit off. Not everything, but a partial. I like to phase out of my positions because the market's giving me something. I want to take a little bit of it while it's going up, pays for my commission, reduces my position size. So if it does turn around, then I have fewer shares. So, a lot of this is psychological. And when you have too many shares, a lot of traders will not trade correctly because they have too big a position. A little slight move against them that may scare them out, when in reality there's probably, there may be nothing wrong with the chart pattern or the trade, but people just get nervous because they have a large position. That's why it's always important not to have too large a position, so you can actually trade the price of the stock, you can trade the technicals of the stock, and you're not trading the money. You really need to be able to trade the technicals and the position, not trade the dollars and the cents. So going forward, how am I going to manage this? Well, if it tested the 50 RSI up here and rejected it, I would get out. If it closed back below the 200-day moving average to the downside, I would also get out. But if that happens, again, I've scaled out already up here. So the options to the upside, if we test the 50 and reject it, I will lock in profits. If we test the 50 and close back above it, I will keep it and continue to phase. If it went down immediately from here and closed back below the 200-day moving average, I would get out of the trade that way as well. All right. So diamonds. This is the regular diamond ETF for the Dow. I bought this here on the 13th of May. Intraday we went below the 30 RSI. And those of you that follow this channel know that I pay attention to the 30 RSI. If I have a stock or an ETF that goes below the 30 RSI intraday and then closes back above, that is a signal for me to buy. Let's say it went down to 29.90 and it closed back above and it's 30.05. If it then the next day closed at 29.99, I would get out of the trade for a small loss. But in this case, it immediately went our way. I can't remember how many profit targets. I believe, let's see, that was, I'm sure, 2, 3, 4, 5. Yeah. From here to here, I've scaled out of about 50% of my position size. Currently, where it is right now, I have some options. I can either similar with DDM, I can wait and see if it tests the 50-day RSI. The 50 RSI rejects it, I would take profits there. The other option would be a close below this 5-day moving average, because I wouldn't, because it's so far extended away from my entry, I don't want to let this come all the way back down here. My inclination today is I will watch the 5 EMA, which is currently 257.86, and right now we're at 257.89. I do not like that yesterday we went up above the 10-day moving average. We tested the channel, which is this downward sloping green line, and rejected it. Today we again tested the channel and also tested the EMA, the 10-day EMA, and was rejected again. My inclination is to go ahead and just lock profits in on this trade. It's been a nice trade. We got some near the high. We're still nicely in the money. So yeah, at this point, more than likely, unless it closes back above the 10-day EMA here, I would just go ahead and call it a good trade, lock in profits. Facebook. I did buy Facebook yesterday on the 16th when we closed back above the 10-day moving average and the 20-day moving average, and we were safely above the 50 RSI. I don't like the action of what's happening here, that's for sure. Today we did go back above the 10-day and the 20-day and the 5-day. Currently, We are under all three of them. We did catch a little support here at the -1 ATR channel. This is this green line. Probably, this one's a coin flip. This is really a coin flip because you're still above the 50 RSI, which is positive. You're still holding the -1 ATR channel, and you are holding halfway of this big bar. So I guess probably the correct way to look at this is I would probably use a close below this halfway mark right here of this large bar as my initial stop, and or a close below the 50 RSI. So that is how I'm going to view this. Let's see here. Yeah. So, all right. So that is what I'm going to do. I'm going to use a close below the halfway of this bar and or the 50 RSI as my trailing stop. So if it closed right here, right this second, I would go ahead and hold it. Okay, here's gold. Gold is an interesting example. I'm not happy that it went down today, but I'm happy in some sense because it gives me a good teaching situation. But I got into gold here when the 5-day crossed over the 20-day EMA. That's a profitable, back-tested crossover system over time. The next day, it immediately went our way. I got out of about 50% of the trade up here in the profit. Yesterday, I was considering getting out of gold here, which even though it came back to where I bought it, I still would have made a nice profit on it because I scaled out of 50% up into this range. My plan was my entry, this is the dotted line. My plan was that if it closed below my entry, that would be my stop. That would be my signal to get out of the trade. And again, it went up. I got out of 50% here. So if it came back to here, back to even, I still would have made money, right? But you can see it during the day, it did go below and did close back above, keeping me in the trade. So today we've had a big down day, obviously. Now you would think that if I bought here, I'd have to have a negative trade, right? Because that's all the way down here. But the reality is this is a break-even trade. How is that possible? Because I bought here, I sold half here. Here I still have half. Now today I've given back the half that I made up here. So all in all, net, this trade, we'll see where it closes, but this trade is a break-even trade. I mean, that gives you a lot of latitude, doesn't it? If it would have kept going up, would I have been mad that I sold 50%? No, I wouldn't. I would have just been happy that it's continuing to go my way. So that's why I'm such a big fan of phasing out. It gives you some wriggle room. If you phase out to the upside, it gives you some wriggle room if it goes against you because you've already locked in profits above. So I definitely will be getting out of this trade today. It would have been nice if I would have closed below yesterday and I could have just got out. But anyway, it's a good teaching example of, even though I bought here and I'm down here, I'm break even on the trade. And that's the major principle with trading is have big wins, small wins, scratch trades. Scratch trades basically break even. And small losses. You just can't have large losses. So this would fall into the category of a scratch trade. So I will be going ahead and exiting gold at the end of the day here. All right, AT&T. I did buy AT&T May 15th. And why did I buy it? Well, we had a nice test of the 20-day moving average below and back above. We tested it back above. MACD went positive, which is a momentum indicator. We did the previous day, I just didn't catch it, but the previous day we did trigger a fractal, and a fractal is a high that has two lower highs to the left of it, two lower highs to the right of it. So those were the reasons that I got into the trade. It tested the 20 here, or it closed back above the 20 here. It tested it again, rejected it, moved back up. MACD went positive, and we triggered that fractal a couple weeks prior to that. So that is the reason I entered the trade. I believe I got out of, now I can't remember, was it two? I think it was 3 profit targets yesterday. So I got out of 30% roughly of my position yesterday. And then today you can see this dotted line here. That was one of my profit targets that actually triggered for me. So I'm out of 40% of this trade. Where am I going to get out of this trade? Well, currently this blue line here, that's the 70 RSI. If we moved up to the 70 RSI, tested it, rejected it, that would be my signal to get out of the trade. Conversely, if we come back down and we have a close below the previous day's bar, so this current bar here, if we had a close back below here, that would get me out as well, or a close below my profit target would get me out as well. But because I've already gotten out of 40% to the upside, it gives me a lot of cushion to the downside if it goes against me. So anyway, this has worked out to be a nice trade. Glad that I hit a profit target higher than we actually are today, or currently are now. So that is AT&T. Okay, S&P. As the people that watch this show know, I do always purchase a position in the S&P right near the close, and I do that based upon a back test that I find fascinating. Really, it's very simple. Since 1993, if you would have bought the SPY on the open in the morning and then sold each day on the close in the afternoon, you would have actually returned a negative 5.2%. But if you did the opposite and you bought the SPY at the close and then sold it first thing in the morning, you would have returned 568%, meaning that more than all performance came in after hours trading. So what this is saying is that since 1993, if you really add it all up, all the gains we've had have come from the close to the opening in after hours trading. And the red line here, this is the buying in the morning, selling in the afternoon. The green line here is the buying in the afternoon, selling in the morning. And you can see since 1993, this has been a very profitable approach. Now, it doesn't mean that there's times where it really goes against you. In the last couple weeks, it's really gone against me. I'm still net positive using this, but I am in a drawdown. I feel like I'm in this right now, although it's probably more like this. But a lot of people give up on proven back tested systems when they run into a little rough patch. They just say, oh, this isn't working, I'm going to get out. Well, yeah, you have to look and say, did this work in the long run? Yes, it certainly has. So I'm going to continue to use this. I know that I'm in a little bit of a drawdown with this, but like I said, since I've been using it, it's still profitable. So that being said, I did buy it here at this little dotted line yesterday. I did sell it this morning, unfortunately, right at the low, and then we reversed back up. Now we are actually coming back down. So this was a loss for today. We did have a little bit of a gain yesterday. So I will be buying this again, just my regular 10% position size. And so that is why I buy the SPY every day at the end of the market. So, all right. Let me see what's happening here. Okay, Verizon. I did buy Verizon yesterday. And why did I buy it? Well, few reasons. First of all, we had this fractal. Here's the high with 2 lower highs to the left, 2 lower highs to the right. That's a fractal. Also a range. Not all ranges are fractals, but all fractals are ranges. So we did trigger that fractal. We did have the MACD go positive. We close back over the 20-day moving average. You can see it's been a long time since we closed above that 20-day moving average. This was back in April was the last time we closed above. And now this entire time up until yesterday, we tested it a couple times, but we were never able to close above it. So yesterday I did buy it because it closed back above. MACD went positive. We had some good volume. We took out this fractal. And lo and behold, we had a nice move, didn't we? As you can see, I did hit 3 profit targets today, about 30% of the position. So, which is nice. You know, being out of 30% of the position right now really takes the heat off, right? And they were all in a profit. So, you know, what am I going to do with this stock moving forward? Well, currently it's at a 58 RSI. If it closed up above the 70 RSI and then back below, that would be my signal to lock in profits. But to the downside, you know, how are we going to manage this trade? Well, we're at a 57, 58 RSI. Yeah, you know, this is a tough one. We could possibly use the 50-day moving average now as our trailing stop. That might be a good idea, actually, especially being that we took some profit up here. This 50 just coincides with about the halfway of this bar. Whenever you have a large range bar up, a lot of times you are going to find some intrinsic support right at the halfway. So that would make sense. Probably a close below the 50-day moving average at this point would make sense as my trailing stop, being that we've gone up, we went up so far, and now we've come back down. So yeah, a close below the 50-day moving average, that would be my stop to the downside. If we went up to the 70 RSI, rejected it, and closed below, that would be my stop. And then in between, you know, if we start moving up, and then we have a negative bar, like it goes up and reverses back down to a V1 or something, that would also be a signal for me to exit the trade. Or if it continues to move up and then we have a bar close below the previous day, that would also give me a reason to get out. So, you know, when I look at this big picture, if it rejects if it just goes straight on up to the 70 and then rejects it, that's easy. If it goes down, closes below my stop, that's easy. But kind of the artistic part of trading is when you don't have those clear of signals, and you're in the money, you know, you have to look for some price action movements in the stock to tell you, is this a good place, a possible place to exit my position if I don't get to my ultimate profit target. So I hope that makes sense. But it was a nice trade today. At one point it was up it was close to 1.9%. But we, you know, locked in 3 profit targets. And with profit targets, you always seem to get one right near the top. It's a little bit of a moral victory, right? So let's take a look and see. So the Dow is down 88 points. The NASDAQ really reversed. I'm happy to say that we are having a nice profitable day, even so. And that is thanks to the phasing out. So let's see. Hey, Mount Doji, how you doing? Yeah, that was a good call on Verizon, huh? But, you know, it wasn't just a call that I just pulled out of a hat, right? I mean, the technicals were all there. Fractal, it had previously rejected the 100-day moving average. You know, we tested, we finally closed back above. MACD was positive. So all sorts of good signals there. And it doesn't mean that the stock is going to go up just because you have good signals. It really doesn't. But it just means based upon prior price action, those type of signals did produce an edge in the long term, but it doesn't mean it's going to happen this time. So you always have to be scared when you enter a position. I really like being scared because if I feel really strongly about a position and it goes against me, it's harder for me to get out because it's opposite of what I thought. So if I literally go into the trade being afraid of the position, and then if it goes against me, I immediately get out, because it reinforces that I was right about it going the opposite way. So, you know, a little bit of mind trickery there, but whatever it takes. Trading is so much a function of emotions. You know, hitting buttons and entering things, very, very easy, but where you become a profitable trader and a successful trader is in self-mastery. That's really what it comes down to. I mean, the more I do this, the more I realize that the difference between winning and losing traders is their mind and their discipline, not their trading signals. It's important to have good trading signals, but the mental part is much more a factor. All right. Hey, Frederick, how you doing? Hey, it's always nice to see you here. How are things in France? Hey, I hope you're learning something. You're asking some really good questions. And if you have any more today, please let me know. And Dr. Jorgensen says, good trade on AT&T and Verizon. Keep using your phones. That's right, everybody. Rev those minutes up because Greg's got these telecommunication positions. All right, let me take a look real quick. Yeah, it's nice to have a green day when the market is down. Hey, real quick before we get into the positions, I do want to show you. We haven't talked much about this, and the reason we haven't is because the market's been in an uptrend. But we did talk about it with gold, where we had the 520 cross. But long-term moving average system trades over time are very profitable. And you see the pink line here, that is the 5-day moving average. The blue line is the 20-day moving average. If you would have taken this trade last, you would have bought it when the 5 crossed over the 20 right here. And then you would have gotten out of the trade, I guess, right here when the 5-day closed below the 20-day. Great trade, right? Great long-term mechanical trade. And then it closed below, you would have gotten out. So if and when the 5-day closes back over the 20-day, I will enter the position now that the 5 is underneath. But the 5 closing above the 20, I know that it's not going to win every time, but I do know the ones that win usually go a lot further than the ones that lose. So, the Qs, if we get a 5 crossing over the 20, I will enter that position. Here's the QLD, which is the double leverage Qs. This signaled about the same time right here, and then it unsignaled. Oh, no, it has not unsignaled. So you would have gotten in here, you would have rode this whole thing up, you would have still been in because the 10 is still above the 50. So I would be interested to, if and when the 10 crosses back below the 50 and then back over, that will be my next entry on a moving average crossover system. And, I liked, how we talk about that it's important to not have too many stocks in the same industry, not having 3 or 4 stocks that are in the tech industry, right? You want to be diversified. Well, it's important to be diversified in your stock selection, but I also like to be diversified in my trading approaches, right? I like to have diversification. So me personally, I do discretionary trades, and this is what you've been watching me do, are discretionary trades. Have not done a lot of crossover trades because there have been no entries for me. But once those happen, then not only will I be doing discretionary trades, but I'll also be doing these crossover trades. And then I also do a little bit with options. I mainly sell puts. So I have 3 different approaches: discretionary trades, moving averages, all that kind of stuff, V1s, V2s, crossover trades, which I'm showing you here. And I generally do that on indexes. And then I do some selling of puts to generate some income, which is totally different than these two. So anyway, DDM, you can see it did cross over. So if the 10 crosses back above the 50, that will be a possible entry for me there. Let's see, the SPY, it's getting close. It crossed over here. You roll this entire thing up to here. If it crosses back below and then above, I will get in. IWM, See how it's almost crossing to the downside? Almost crossing to the downside. So if you would have bought this, that would be your entry, your exit signal. Let me show you Apple. This is back tested. 10-day, 50-day EMA happened here. You can see we're getting very, very close to uncrossing. So if it uncrosses, then crosses back over, that would be my entry point. There's one on Amazon. That's the 5-day crossing over the 50-day. We'd have gotten in here. You would still be in until this 5-day crosses back below. And then Google. Google's an interesting one. The best back-tested crossover system that I found for Google is the 10-day, 30-day EMA. So here's the 10-day crossed over here, and it uncrossed over, looks like this day here. So if and when the 10-day crosses back over the 30-day, I will re-enter a position. And let's look real quick and see what that 10-30-day looks like on Google. This is etfreplay.com. They give me permission to show these results. So here's Google using the 10-day EMA and the 30-day EMA since 2000. And you can see using the 10-day, 30-day, you would have made 847.2%. Now, if you would have just bought it and held it, you would have made a little more, right? You would have made 1,121.5%. But the drawdown using the 530 crossover was only 23.9% compared to 65.3%. And if somebody said, I'll give you 872 with a 23% drawdown, or 1,100% with a 63% drawdown, I would always take this one because drawdown's the most important thing. So, you know, people look at this and go, oh yeah, but that one made more. You don't know what your mental state of mind would have been if you had to go through this drawdown. It's very likely that you couldn't take it anymore and that you would have said, screw it, I'm selling everything, I'm scared. And people never talk about that. That's why it's so important to keep your drawdowns small, because if you keep your drawdowns small, you're not destabilized. You keep yourself together mentally. But when people have big hits, they don't do rational things. They get scared and they may just have, you know, bailed out at the very bottom. So something to think about, something to think about. All right, where are we at here? All right, so I hope that helps. So as soon as some of these moving average crossover systems do trigger, I will be getting into them. Probably change my position size around a little bit because now it's a new strategy. But anyway, we can talk about that. We can talk about that later. So, all right, let's go down. Let me take a look here. Nice cup and handle on Verizon. Let's take a look. Did I miss that, Bruce? Oh, that's Visa. Yeah, yes. The only thing with this cup and handle, though, Bruce, is that you want the cup to come at least about 3/4 of the way. Say here, it would have to have come about here and then go down and then go up. But good eye. I did not even notice that. It is technically a cup and handle, but the right hand of the cup did not come up high enough. But regardless, it worked, which was nice. But yeah, good eye. I'm going to start calling you Dr. Cup and Handle because you picked those out. I mean, you picked those out really well, actually. Your eye's just drawn to them. I had no idea about this end-of-day trading. Yeah, it's important, Mount Doji. I am good, thanks. It's the weekend. Good for you. Hope you have a good weekend. It didn't go high enough. Yeah, you're right. You're right. All right. Excuse me. Let's take a look and see what's going on. Okay, so we were higher and the market just really fell apart here, right about when we started the podcast. That's the power that we have, this podcast has. So, Apple did make a lower low. It did test the 200-day. Now it's come back down. It doesn't surprise me at all. These lower low trades tend to fail the first time they rally. If we can get it looks like we're going to close below. If we get another close below and then a close back above, I think that'll be a good trade, because then that will have a higher low before our entry signal. Having an entry signal and having a higher low behind you is always vastly more desirable than just coming off a lower low, because a lower low, people that bought here, as soon as it goes up, they're going to be looking to sell. That's going to cause the price to go down. But the good news is, because they sold here, now those groups of sellers are gone. And if you can go back up, it makes it easier because you have fewer sellers in the equation. So currently, right now, I'm not interested in Apple. I would if we close back above, especially now that I don't know if this is a higher low. It could go down and make a lower low, but currently right here, if it stopped here and then Monday it went back up, I would take that trade. But nothing on Amazon, right? Or Apple now. Amazon, it's at risk of losing its 50 RSI there as well. We talked about this yesterday. You could make the case for it. It did close back above all the moving averages. It did close back above the 50, but a lot of times when you have two big strong bars that move, that's usually it for a day. I mean, sometimes they go up higher, but in my experience, after two large bars, the market tends to reverse a little bit, go sideways before it picks a direction. So I'm glad we didn't get into that. I certainly would not buy that today either. Boeing, here's an example of people buying this low, it rallying up. If I would have bought here, I would definitely been looking for a rejection of the 100-day moving average. The 200-day moving average. That would be my signal, because when you come from a lower low, people generally sell that first rally, and this is the first rally. So now if we come back down, then go back up, now we have a higher low. That makes things better. But like I said, the people that bought here most likely are going to sell here, and that's why I don't like to buy the first move from a lower low. If the chart's decent, I will do it, but I'll buy a half position only. I generally only buy half positions if we're coming from a lower low. Alibaba, well, we've lost the 100-day moving average. We're at a 35.44 RSI. Where would I be interested in Alibaba? I would be interested if it closed under the 30-day moving average and closed back above 30-day moving average, similar to this trade here on the diamonds. Here we went below the 30-day intraday and then closed back above. So looking at Alibaba, it's at a 35.50 RSI. The 30 RSI will most likely coincide with the 200-day, so that would be a good confluence of signals. Low RSI, testing the 30 RSI, and the 200-day. So that's where I will be turning my attention to. It's important just to be patient, let it come to you. All right, Caterpillar, we're at a 29.35 RSI. So if this closed above a 30 RSI today, I would buy it. But because it's under the 200-day, I would only take a 5% position size or a 0.5% position size. But currently it's at 29.27. I would not be buying this here until it showed me that it rejected under the 30 RSI and then closed back above. All right, so we'll watch that one to see if we have some kind of rally at the end. Canopy, we came from this lower low. We tested the 50, People that bought here most likely sold here. That's what's driving this back down. I'd like to see this close below the 100-day moving average and back above, or actually the better signal would be a close right below the 200 and the third ATR channel and then back above. So I think I mentioned this yesterday, but I'm going to be really patient and wait for a close, or wait for the price to get near this position. That would be a really good entry signal. A good risk to reward location, I should say. Cisco had earnings moved up, still up on the day, which is really positive, especially being that we are down almost 100 points at the moment. So this is showing some relative strength, which is nice, but nothing today. DDM, we talked about this. We bought this here. Where am I going to get out of this trade? Close back below the 200-day moving average. It hasn't moved up enough yet for me to start scaling out. So, so a close back below the 200 is where I'll take this. The Dow Jones, I will definitely be locking this in today. We bought here, we phased out to here, but now, you know, it's lost all these moving averages. It's not acting very positively. I don't want to wait all the way back to there. Etsy would have been an okay trade above the 100-day moving average. Moved up, hasn't done much. Really nothing on Etsy here. All right, Facebook. Well, we talked about this. I did buy this here yesterday. As long as it holds the halfway of this bar here and or the 50 RSI. If it closes below the 50 RSI today, I will go ahead and sell that, just take a small loss. But, you know, I do want to point out that, you know, our profit target was to here, right? That's a 70 RSI. So that's a nice profit target if it gets there. But if we're wrong, you see what kind of loss? Just a small loss. And in order to be a profitable trader, that's what you need to do. You need to limit your losses to small and give yourself some upside for the upside potential for the profits. So if Facebook closes below this halfway mark and or closes under 50, I will be getting out of the trade. Okay, just give me a second, please. All right, gold. We did talk about gold here. Closed above my entry price today. I will be getting out of that. And like I mentioned before, this is going to be a break-even trade, as amazing as that sounds. Google, you know, Google did move above the 200-day moving average, and then yesterday got to the 50 RSI and rejected it. That's why I did not buy it yesterday, because it went from near a 30 RSI up to a 50 RSI, got rejected. So if I would have bought down here, I would have been selling here. And that's why I did not enter the trade. And, you know, it's good that we did not. But I was expecting this to happen. You know, 30 to 50, they usually come back down. Not always, but usually. So where would be a good entry for this if it moves down? Somewhere in here. Or a test of the 200 again would be good. Or this 100-day moving average, but nothing today. Goldman Sachs, nothing there. IBB, nothing there. Intel down again. Boy, it's having a tough time. Oh, give me 1 second, please.
Order filled.
All right. Had an option trade that I had to work with.
Order filled.
Okay. Back to business. IWM, I considered buying that yesterday when it closed back above the 200-day, but I did not because I already had the diamond ETFs and there had been too much correlation. So, and it is down today. Now, if we move back above the 200-day, I will get into that for sure because that would put this higher low in place. This came from a lower low, failed. Now we have a higher low in place. Much more likely it continue to move up if you're coming from a higher low. Coca-Cola. Let's take a look here.
Order filled.
All right, Coca-Cola is having a nice move. We did break out of this previous high, so it currently is a legitimate breakout, but it's a 63 RSI. It's too high for me. Lockheed Martin, not doing too much there. It is just moving sidewards. MasterCard did have a nice rally back over there, but you know, it's a little too high to buy, and it's range bound. There's no signal, so there's nothing for us to use there. Merck, Merck did have this nice big strong move up above the 100-day moving average. We've come back down a little bit. We do have the 50 RSI above us, so I'm gonna not do anything with Merck. Microsoft, you can see that is what's called a kangaroo tail. That is when it opens, moves back up, and then it gets sold into, closes all the way back down. So that is not a bullish signal. That's a bearish signal. That's what Dr. Alexander Elder calls a kangaroo tail. Netflix, same pattern as the rest. We go to a low, we test the 50 RSI, people that bought here, sold here, that moves it back down. If we close below the 100-day and then back above with a higher low behind us, that would be decent. Or if we move to the upside, close back above this 50, I would also be interested, possibly in a long there. So down below the 100 and back above, that would be a dip buy. A move back above would be a momentum signal. Nike, we did buy Nike here back on the 9th when we had this nice V1 entry. We rejected the 100-day moving average. We closed back up into the range. Our initial stop was a close below the 100-day moving average. Remember, end of day price is most important. So did take two profit targets here. During this day, it went down. It got a little scary, but it did close back above my entry point. Then the next 3 days, up, 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 up. I phased out of everything. It was a nice trade. Did close out of it here yesterday because we did test the 50 RSI and then it closed back lower. So that was my entry. That was my exit signal. So it was a nice trade. Philip Morris having a big day today. PayPal, not real positive. I mean, it looks good on the surface, right? But do you see how this was the previous high? We went higher, and now today we've closed lower. This makes this a false breakout to the downside, which is not a good signal. The Qs, I was going to take this back here on the 15th, but the reason I didn't was because I literally just missed the trade. I ran out of seconds at the end of the day because I like to get the trade as close to the end as possible, but I missed it. Then the next day it immediately went up, but it did test the 50 RSI and then rejected at the end of the day. So had I bought it here, I would have sold it here because it rejected the 50 RSI. You can see it went from the 30 up to the 50, and that's where it found resistance. And today it is down. So we have another close back above the 50-day moving average going forward. I would definitely take that, and I would like it a lot better than this one because this one was a lower low that triggered. If we close down below it and then go back up, that gives us a higher low. I know we always talk about higher lows and all this kind of stuff, but they're so important, folks. Here's silver. Currently, silver's at a 29.11 RSI. If this closed back above the 30 RSI, I would buy it today. I would buy a half position, so I will be watching this at the end of the day. The SPY, I will be buying this at the end of the day. Let me take a look at something real quick. Okay. All right, AT&T, you know, we have this position here. Where am I going to get out of this? Close below the previous day's low and or moving average, probably whichever one comes first, or if we go back above if we get to the 70 RSI and then fail. So that is how I'm going to manage that trade. Bonds. Just moving on up there, but too high to do anything with. Tesla. I did buy Tesla here on the 14th. And why did I buy it? Well, this was the previous range. We had a rally. We came back down. Then we closed back up into the old range. This is the new range to the downside. We closed back up into the old range. What was my stop? A close back under, a close back into the new range. The day, 2 days before, it went below, but closed back above, which allowed me to keep it. But you can see yesterday I got out of this trade. And why did I get out? Because it closed under my stop. This is the new range down here. This is the old range. It closed back into the new range. So I did exit the long position, and you can see that was a good idea, right? Otherwise, this would have happened if I would have not gone ahead, take my small little loss. You know, my loss was from here to here, very small. But if I would have been stubborn and for some reason with my crystal ball thought, no, I think it's going to go up, well, the market would have proved everyone very wrong. So definitely would not like to be involved with this day. And we got out here because we followed our rules. It's at a 28 RSI. If it closes back above 30, I may take a look at it again. Okay, we have 8 minutes. UNG, actually did buy UNG here when we triggered this fractal, had a few profit targets, and then I got out there for about a scratch trade. Did make some profit targets, but then did take a small loss. It was basically a break-even trade, but it has moved back going the way I wanted it to, but I'm not in the trade. So USO, which is oil. Actually did buy this here when we closed below, closed back above. It kept me in. I got out of about 30% here. Then it closed back below the 200-day, and I got out again for a scratch trade. I didn't get back in the trade the next day because it stalled out at halfway, and I was thinking that it would go back down, but it went up. But it's fine. It was a scratch trade. That's valid. Visa. You know, I do not short very often, folks, but I am thinking about taking a short position in Visa today. And the reason why is here's a top. We went down. We tested the top yesterday. See how we went higher. We tested it, went down below. So it's a double top. Today we are down. My stop would be if it closed back above this bar here, which is the high. So if it goes out, breaks out to a new range, that will be my stop. But the other reason it's important is, you see how high we are at right here? Look at the reading of the RSI. See how high the reading of the RSI is right here? Now, here we come back, make a new high, but do you see how low the reading of the RSI is? So basically this went higher than this. This here should be higher than this, but it's lower than this. So that is an RSI divergence. So, you know, where's my profit target to the downside? Probably down in here. Where's my stop? Any close above there. So, you know, it gives me a good risk to reward ratio. So like I said, I do not short that often, but this one is a nice setup. I don't know if it's going to work, but I do know that if I have a loss, it will most likely be small. And if I'm patient with my winner, the chances of me making the chances of me having a gain is going to be larger than what my loss would be. You know, I may lose 1% on this, but I may make 3% if I'm right. All right, we've got 5 minutes. I don't think we have anything to buy except for the shorting the Visa. VIX retook its 50 RSI. Verizon we have. Energy Select, nothing there. Real estate, doing pretty good. And healthcare. So, all right. So what do I need to do? I'm going to short the Visa position. I'm taking a half position because it's over the 200-day moving average. And I'm going short. So that's the reason I'm shorting a half of a position. So, all right. Let me go ahead and get some of these things taken care of. All right, let me start with that actually. All right.
Order partially filled.
Okay.
Order filled. All right, so I shorted Visa. Right here at 164.30. My stop is going to be a close above into the new range. Right now we're back into the old range. All right, so we're 74. All right, so Visa is taken care of. We did not have any other positions today, did we? Apple, no. Silver would have to close above the 30 RSI. I guess it's possible. It's 29.38. And then I'll be buying the SPY. I'm trying to wait till the very last second to do that. So got out of the diamonds. Going to keep the DDM. Oh, Facebook. Yeah, Facebook, it looks like it's going to close okay. So, all right, what do we have? A minute and a half. All right, so I'm going to go ahead and buy my SPY position. Order filled. Order partially filled.
All right, SPY
Order
is taken
filled.
care of. Yeah. right, so we got about 15 seconds, but yeah, everything looks fine. I did get out of DDM. I'm sorry, DIA. Facebook is holding the halfway in there, so.
Order cancelled.
All right, that is the market for today. So it's good. We had 3 profitable days in a row, which is always nice, and especially today, it's nice to have a nice profitable day even when the market is down. So, all right. Boy, interesting trading week. Hey, before we get into questions and answers, I just want to do my daily plug and to let you know that I do offer private coaching and mentoring teaching lessons during the evening time via Skype. And, if you feel like it would be helpful to work one-on-one with me, I'd be very happy to teach you everything I know, take a look at your situation, help you put together a trading plan, work on any of the issues that you're having. And, my goal is to make you a better trader. So if that's of interest to you, please let me know. My contact information and my hourly rates are in the description of this video. So, and then also, if you learned something today, you found it helpful, please do me a favor, hit the thumbs up button. That helps with Google. And if you know someone else that this podcast and this live stream might help, please turn them on to it. And, let's grow this channel. So, all right, let's see. Mount Doji says, I'm back. What did I miss? I had a call at 2:30. Well, the market went crazy while you were gone, Mount Doji. No, I'm kidding. Not too much. Well, other than the market did sell off, actually. It was hovering around break even, and it really kind of broke at the end of the day. So let's see. Does anyone have any questions? You want me to look at any stocks that we didn't look at today? I'm happy to give you my opinion. Just let me know. All right. While you're thinking about that, I do want to let everyone know, do something nice for someone today. Hold the door open for them. Say hi to them. Give them a smile. It may make a difference in their day, and they may pass it along and do the same for someone else. It's free. It doesn't cost any money, and it's just a nice habit to get into. So, all right. Okay. Frederick says, how many different sectors do you have in your list? What is the maximum different sector you think it's good to trade? Which one are you focused on at the moment? Okay, well, that's a good question. Well, you have your basics, right? You have your different sectors. You have technology, you have industrials, you have telecommunications, you have oil, energy, you have retail, which is like an Amazon. You have semiconductors, you have tobacco. So, those are the main sectors. And so in my particular watch list, I have examples of each one of those. Boeing is aircraft manufacturing, Alibaba is tech retail, Caterpillar is industrial, Canopy Growth marijuana, Cisco is technology, then we have the Dow, Facebook technology, gold, which is its own sector, Google technology, Goldman Sachs is financials, Lockheed Martin is defense, MasterCard is financial consumer spending kind of stuff, Philip Morris is tobacco, Nike is shoes, AT&T is telecommunications. So it's important to have, a real mix of all the different industries. And then what's the maximum different sector you think it's good to trade? Well, I think it's important to have as many sectors. There's a finite amount. I don't know how many there are offhand, but it's important that you have a diversified group of stocks and sectors. And then which one are you focused on at the moment? Well, I would say between AT&T and Verizon right now, probably one of the better performing sectors is telecommunications, right? Based upon the price action of today. Oh, William. Hey, William. Hi, Greg. In your years of trading, what has a higher probability of working, a test of the 30 or a 200 MA? I would say the 200-day moving average. I think the 200-day moving average is probably one of the strongest indicators there is, because there's a lot of people, especially large institutional financial firms and hedge funds, they look for dips back to the 200-day moving average. So there are, a lot of people are keying off of that level. But as I mentioned before, it's important to have multiple indicators line up. So a 200-day, yeah, probably the strongest standalone indicator in my opinion. But the 30 RSI is good, but if it lines up with the 30 or with the 200-day, I think it's better. I mean, I know it's better to have them both line up. But to answer your question, the 200-day moving average would be a better indicator to me than just the 30. But, in this market, it's difficult to make money in this market. And other than the 200-day, I don't think there is one indicator that you can use that just standalone that you can expect to beat the market with. Just using MACD, I don't think you can beat the market with that. Just using a 30 RSI, I don't think that's enough to beat the market. I think you have to have a multiplicity of indicators line up for you to be able to extract money out of this market. So hope that answers your question, William. Light car sector is not good at the moment, Frederick says. Yeah, and cars. Yeah, sorry, forgot about that one. Well, let's look. It's been doing okay, moving sidewards. Not Tesla, though. Let's look at GM. But yes, that's a really good point. Frederick, I don't know if you can see on your end, if you can see my watch list, but if you can, might be a good idea to just take a snapshot of that and enter that into your trading software, whatever you use, because I spent a long time cultivating this watch list to try to make it diverse enough, and so it may not be a bad list to copy. Which moving averages are the most powerful as entry indicators? Well, as a general rule, the larger the moving average, the stronger it is. So would I give more weight to a 200-day moving average or a 5-day moving average?